It's good, David.
Yo. I know these shits are working or not.
I'm only like 5, 10 minutes, 35, 40, couple people to join up, and then I'm gonna just start with this shit.
For sure. I know what's up with my other fucking headset. This is actually really loud. Oh, you didn't hear me? Okay. Oh, shit, I couldn't hear anything. Hmm?
Butter. No, you gotta go eat your waffle. No. Bring your waffle. No. You don't get.
Yo, could you hear me through this one?
How many times did you wash your
You
hands?
sound clear on that one.
All right, perfect.
Okay, we need it.
What's up, Neil? Fuck it. I'm gonna start. I'm gonna do like maybe like a 10 part. I'm gonna just record I'm gonna try to do meetings every Saturday at 10:30, and then just record everything, put them on YouTube. So if you guys know anyone that wants to learn anything that we go over, they can learn in the future. You know, you don't gotta be here live. So I'm gonna focus on money management, risk reward, and fluidity basics today. It's like, can y'all hear me? Is David still in here? Can you hear me, David?
Yeah.
I could hear you.
All right, for sure.
Yeah, Pop.
All right, so I'm gonna start off with the basics, because if you never learn money management, you never learn risk reward. You could hit $1 million plays, and I guarantee you you're gonna end up fucking with your account. So what I want to focus on money management, meaning there's always opportunities in the trading market. You don't want to rush in. If you have $1,000 in your account, 100, $10, doesn't matter what amount of money you have in your account, you have to use it wisely. So um, for money management, let's say you want to start off with a $1,000 account that could translate into, you know, dividing it 12 months out, 10 months out, so you'd only risk $100 per month or something like that. Because I know a lot of people start trading and they think like, oh shit, I'm trying to get rich by next week, by next month. That shit don't work that way. You rush it, you're gonna get clapped, bro. You throw in your 1,000 on one play, you lost, now you're broke. You split up the money throughout, every week, every month, every play. You just use your money wisely, you'll stay in the game. But if you do stupid shit, the market maker is gonna take advantage. They're gonna take every freaking cent you give them. So risk reward, I want to focus on 3 to 5. That's what I use. I do 3 to 5 risk reward, meaning if I risk $100, I'm trying to make minimum 300 to 500 on that investment. Um, if you're risking $100 to make $10, like nothing wrong with that. It's still money. But why are you gonna risk 100 to make $10 when you could risk 100 to make 3 to 5%? Who joined? Oh shit, Erica. What's up, Erica? We started like a couple minutes ago, but I recorded it, so I'm gonna put it on YouTube. You didn't miss much. We just started. I just talked about money management. You already know about that. Risk reward. I think I've told you about this too. Um, so in my opinion, this is more important than technical analysis skills. Technical analysis skills are very important, and that's gonna determine your rate of success. But if you don't follow this, you could be the best technical trader in the world, and I guarantee you're still gonna get clapped. This is the number one thing in my opinion. Control your time and control your money. Alright, so this is very simple. It's not a hard concept to understand. I'll explain it later in depth in the course how you guys can work on that. But I'm gonna go ahead and get started on fluidity basics. So fluidity basics is basically this is a chart of Apple monthly candles. Fluidity basics is the concept of understanding market direction. So to start off the basics, I'm gonna just move this out the way. So I want you guys to understand how to read candles when they're forming. So let's say this is a candle, right? Change the color. This is a bullish candle, let's say, so it's green. Wow, I don't know how it looks. Okay. All right, this is a bullish candle, and it has wicks. So the candle area is area where price was accepted. So let's say from uh, 0.57 or whatever this is to 0.48, price was accepted in that target, meaning someone was willing to pay that much for Apple or any given stock at those prices. Often you will see candles leave wicks. The wicks, all that means is that price was rejected in these areas. It was rejected here. It was rejected here. So let me show you guys an example. So right here, you have a bullish candle. Price was accepted in these areas. Came up above this area. Price got rejected. Happened again. Came up into this area. Price got rejected, and immediately you saw a sell-off, which ensued in this bearish candle. So let's go back to the basics. We have a bullish candle. This is how market fluidity works. So let's say you have a bullish candle forming, right? So we started, this would be the base candle. Let's say this is where we start. So this candle closes at this level right here, let's say. So the next candle would start off of these levels. Let's say price goes up, so it turns bullish, right? So this happens, and then let's say price happens to get rejected at these levels, it would leave a wick. So let's draw a wick on this. This candle reverses at these levels because price gets rejected, and it leaves that wick right there. Price starts going down. Now this will no longer be green. This would now become a bearish candle. So I just want you guys to understand why some candles are green, some are red, what wicks represent. So once you understand that, you can understand direction. So if you realize, okay, well, Apple got rejected above this level and it has 2 wicks, so that means resistance. So assuming that, let's say, the next candle continues lower, even if it left a little wick, doesn't matter. So if it left a little wick, you should assume that as long as this candle doesn't go above this level right here, price action should continue down. Get a reversal on this candle or on the next candle, let's say, I don't know, let's say here, for example, and it breaks back above, then that makes this scenario of the wick getting rejected at this level fake. So essentially, when you're trading, you just want to have the best statistical odds at winning. You cannot win 100% of the trade. Sure, you can get very good at it and win the majority of your trades, but it's impossible to win 100%. So you have to be in the best position statistically to minimize your losses and maximize your risk. So I'm going to show you guys an example on how you would play this out on a real chart. If you guys have any questions, I don't know, I think most of you guys are muted, but if you guys have any questions on anything I've mentioned or just comments or anything, just let me know.
Can I see examples of like the candle? Oh, there.
That's a specific example. So if you draw a trend line right here, let's say, you can tell that clearly Apple was rejected at these levels. One, left the wick, and then it tried it again, got rejected. This is a monthly candle, so let me show you what it would look like on a weekly.
Is this what you use?
Here we were looking at. On the weekly, you see it breached above. This is a reversal candle. It has a wick on top. The price action came down. And then if you see after this reversal candle, we get down the following week. Prices tried to go back up there again. They got rejected, left that big wick. So that's not a good sign, meaning prices don't want to go there. So it forms support right here off of the 10-day. So this is an indicator. You don't have to trade based off indicators. I usually don't. They're just like a visual guide, I guess you could say. So it found support, made a high. As you can tell, it failed to breach above these levels again. So these are the highs. Another process essentially. Came up, tested, left the wick, got rejected. The next candle came lower. This is a bearish candle, and we have the same scenario. Bearish reversal, gap down. Bearish reversal, gap down. So it's pretty predictable once you know what to look for, and you just use statistics in your favor. If you're entering a trade that has 80 to 85% success rate, sure, there's that 15% chance you may lose, but you're at a much better advantage over traders who don't use technical analysis. All right, so right here, same scenario, from the support. Once you find that support, made a new high here. After the breach of new highs, this next candle continued to make highs. And same scenario, no rejection, hollow wick. I would have not traded this right here, but then I would have entered on this candle. Different trading styles, my food. Hold on, let me get. Yo, David, is that better?
Yeah, for sure, bro, for sure.
Oh, for sure, for sure. All right, so
No, sorry. Let's talk about. Oh shit.
I'm gonna look at Amazon just to give you guys an example of why. Honestly, I'm not into trading for the money. Sure, you can make a lot of money, but I enjoy what I do. You know, it's fun. If you don't enjoy it, I can't. I mean, money's money. You know, like if you're doing it for the money, that's fine. But I'm just saying, it's like any sport. If you don't enjoy it, you're not gonna put in the work to advance your skills. You know,
I
I don't
think
know
I
you
think
guys watch. What happened, bro?
on my end, bro, I'm gonna have to reach out to you personally because this is, to me, seeing this program that you're showing me is like seeing Fruity Loops to me, bro. You know what I mean? So I would have to contact you back and get more detail with that because I kind of see what you're saying, but I need to go with more back.
Like
Yeah, just
more
to
simple.
just a basic understanding of what the candle, like, I kind of see what you're saying, but I need more thorough training on that because it's a little confusing for me
All right.
to.
So let's say you have a product, right? Doesn't
Right.
matter whether it's a sneaker, food, don't matter. So someone's selling, let's say, a taco, bro. They're selling the tacos for
Now
one
this
fifty.
no, I'm sorry. Question: this program that you have that you're showing on here, that's a general basic program that anybody can find online to see where everything's at.
That's the thing. Most of this information I learned on my own on
Okay.
YouTube, reading books. Like it's a lot of information, but a lot of people, one, they try to charge you for this information that have like thousand
Right.
dollar courses. That's tax in my opinion. Like they teach you a lot of shit that honestly doesn't matter. I've been studying this for quite some time, so I saw what works for me, what doesn't work for me. But yeah, there's a lot of programs, bro. I'm just trying to make it a little simple because
Okay.
as hard as they make it seem, bro. They throw out all these complex terms and shit that, in my opinion, don't even really matter. So I'm gonna try to start over. So let's see. So candles, let's say the price of a taco is at 150, right?
And my apologies to everybody if everybody got it. I'm sorry we're going
Nah,
back to
you're
this.
good, bro. Most people are pretty new, and I'm glad you asked that because I know there's gonna be people that probably have the
Yeah.
same question as you. So
Okay.
let's say we're doing tacos, right? We're selling tacos. A taco is a stock. A taco is a Bitcoin. It doesn't matter. This applies to most financial aspects. You know, it's supply and
Okay.
demand. This is the current price of tacos, 150, right? Let's say up here, I'm gonna move this up. Let's say up here is $3. Nobody's paying $3 for a taco, bro. Like, sure, bro. If you go to a bougie ass place, people might be willing to pay $3 for a taco, but I ain't paying no fucking. You feel me? So it's just a matter of who's willing to pay what.
Yeah, dollar
So,
tacos only, bro.
so let's say you got 50-cent tacos, 150 tacos, $3 tacos. So this could be, like I said, this could be.
That could be any currency, right? It could
It could be a taco. It could be Apple.
Okay.
It could be a Bitcoin. Don't matter. Most financial things trade similarly. So the scenario doesn't matter what you're trading. All right, so these are the prices. This is your candle where you're at. You're at this price because this is what people are currently willing to pay for a taco, right? The price of tacos is at 150. So for whatever reason, let's say they run out of meat or it doesn't matter. It doesn't matter why, but for some reason, the price of tacos is going to change. So let's say they try raising the price of tacos to $2, right? They gonna say fuck that, I ain't paying $2, so the price comes back down to 150, and it leaves a wick. Why does it leave a wick? Because for a short amount of time, people were paying that much for the tacos. So not
So
forever. Like
basically,
let's say
once it reaches, I'm sorry, once it reaches its high point price, I'm guessing, right? It stays on that it stays on there, and then anything under that just drops under that. But it always stays at that level.
not always.
So
Okay.
this is a support, let's say, right? This is a
Mm.
solid support because most people are willing to pay 150, and for years they've been willing to pay 150, let's say. So
Right.
this would be a solid support.
Ah.
Let's say something happens to the demand, we run out of meat or there's not
Mm.
enough taqueros, don't matter. The price comes up, and then let's say that underlying cause that raised the prices is
Mm.
non-existent anymore. So the prices would fall back down and leave that wick. That wick means that for a short period of time, people were willing to pay those prices, but the prices came back down, and now people were paying 150 again for the tacos.
Mm.
So same scenario could happen to the downside. Let me change the color. So if this candle goes bearish, which means it's going down, it would turn red, and it would go from here, it would go down and turn red. You see that?
Mm.
Same scenario. It could leave a wick to the bottom because for a short period of time, people were willing to pay less than 150 for tacos. And then the taquero said, "Oh fuck that, we're not making no money." They raised their prices back up to 150. Now the candle is back where we began, but you have a wick on top and a wick on bottom. Do you see how the wicks kind of?
Right. So now you have two, one on top, one on bottom. Right.
Yeah, people were willing for a short amount of time. They paid more. They paid less. Now the next candle, let's say, so price has went down, price has went up. So let's say the price on the next candle goes up because we run out of meat again, or the taquero says, "I want to make more money." Like I said, the reason doesn't matter. The only thing that matters is the direction. So
Now,
what's up?
I'm sorry. One question. When you say a candle, how often a candle is produced? Like, how often do we see? Is that go based on timing, or what is it like between
Yeah, see,
dates?
I appreciate you being here, bro. You're asking all the important
Yeah.
questions. So look at this. You see this? There's 1 minute candles, there's 5 minute candles, 1 hour candles, 1 day,
Ah.
1 week. Each candle represents an
Okay.
amount of time. So that we're right now, we're on the monthly candle on Apple. So this is every candle represents a month of time. I could switch this to a 15 minute and you will see a lot more action.
Mm.
So each candle is smaller, but so look, this is from April to May. So this small piece is 1 month. If you switch it over to a monthly, look at this, bro. It goes back to 1981. So
Oh wow.
whenever
Okay.
I'm doing my analysis, I start from the bigger time frame. Why the bigger time frame? Because the stronger signal. You could start off
Right.
on a monthly and then go to a week and then a day and then a 4, and so forth. So let's say on a monthly right now, right? What do I see? Apple came down and it came up. But what am I seeing?
Dramatically.
Yeah, dramatically. This is a big drop. Like you can't see it, but if you look on the history of Apple, this is exponential. Look at this. So in terms of monetary value, it dropped about from the highs, it fell about 35%. 35% is $115. If you would have got a contract for in the money contract on Apple, $115 translates to about 11.5K. So like that's ridiculous money. All right, so we're on the monthly. So these are the candles, right? It came down, it came up, but it failed here before. So let's look what it's doing on a weekly. So you see this? This is where it failed before. It failed there again. This week came above it, but it didn't close above this level right here. I don't know if you can tell. It didn't close above it. So that's not a good sign in my book. Sure, we could get a green candle next week and extend above, but I wouldn't bet on it. Let's look on the daily. So you see this? Red candle, this one closed below. So what can happen is we'll fade off of these levels. Where the fuck is my brush?
Lots
It
of
came
red.
up, it failed, came down, tested this old support. So this support is from here. You see this candle?
Right.
It extends all the way over. So it used that support again. It failed at the same spot that it has failed before. So what do I assume? It's gonna fail again, just because it failed there before. So that's a little more advanced. I just want you guys to understand how price action works. But you're right, bro. The time does matter. The bigger the time frame, the bigger the signal. But do you see that wick got rejected, came down, came lower, has a wick at the bottom, which is support. It came up. So I just want you to understand how to read candle movements. So do you kind of get an idea of how how candles move, or you still
Yeah.
want more?
Yes, on my end, yes. Not sure about
Okay,
everybody else,
what do
but yes.
you
Yeah.
what would you
But
want to?
it's I'm guessing seeing it more often. I like
No,
where I
definitely,
mean if
definitely. You gotta, practice the same setup.
I guess now the wicks now those wicks that you're talking about, I say they extend up and they extend down. Whether it's red or green, right? Whether there's a it goes
Uh-huh.
up or down. Those wicks tell me what?
Those wicks tell you that price has gotten rejected here. So I switched over to Bitcoin just because Bitcoin is trading right now actively. Like this market is open, so you guys can see it
Okay.
live, and I can explain it. So this line right here is a support. So you see when we lost the support,
That when you say support, that's where it's constantly at, right?
yeah, it's constantly getting picked up at these levels. So let me zoom
Right.
out on the
Okay.
monthly. So I don't want to go too in depth because I don't want to confuse
Right.
you guys. I want to stay with the basics. But
Yes.
here,
Yes.
this yellow line is the long-term support on Bitcoin. Bitcoin has never fallen below these levels, and I do not expect it to fall below these levels. It keeps getting rejected below this trend line, but it goes back to the same support. It's like think about it. Everyone has a different support system in life, whether it's your mom, your dad, whatever. If you go through some shit, you're gonna go back to the same support because it's been there for you before. Same scenario with stocks. They're gonna keep going back to the same support because they know, like, they're gonna take care of them at these levels. If I ever see Bitcoin below the support, like, it's an easy call, bro. Like to buy in terms to buy. So you see this wick right here, huge
Right.
wick. Price got rejected again at these levels, meaning it should not go below this little area right here. Let's look at it on a 5-minute just to give you an idea of how it works. So let's say we are here, right? This is the range right now on Bitcoin, meaning we've been trading within this little zone, right? Like it came a little lower, came back up, came a little lower, but for the most part, it's been holding above this red line. So you see right here, all these wicks, how many wicks touched? 1 wick, 2 wicks, 3 wicks. So it's a game of support and resistance. Support being the floor, resistance being the ceiling. When you break through a resistance, you are most likely going to see new highs. In the same aspect, if you break below a support, you are most likely going to get new lows. Let me see if I can find an example right here. So this used to be an important area on Bitcoin. It had been trading within this area for a long time. The minute it gave up this wick right here, it sold off, let's see. It fell from like 9,600 all the way to, so it fell about $500 in less than 15 minutes once it gave up this support right here. So same thing, like this candle right here. Let me go to a 5-minute. So right here, we have two red candles. Sorry, we have one red candle. You see how there's two wicks right here?
Yeah.
You have one wick and another wick, meaning as of right now, Bitcoin is not getting, no one's willing to sell it below this price. If this candle breaks below this support, then that's a different story. But as long as Bitcoin stays above this level, we should continue to go up. So look at the new candle. The new candle opened up here.
Now for example, one question mark. Right there, but I see the time frame. Well, you moved it.
Oh my God, put it to a 1 minute just so you can see the actions a little
Oh,
faster.
okay. Oh, it's by minute. That's what you were seeing right now. Okay.
Yeah. So this is a 1 minute. I was on the 5-minute, 15.
Okay.
So one is the fastest. I put it on the 1. So you see this timer right
Yeah,
here?
that's those. Okay.
So every time that candle ends, you get a new candle which represents new data. If I switch it to a 4-hour, you see how it says 1:59? There's an hour and 59 minutes left on this 4-hour candle. If I go to a weekly, there's 1 day left and 6 hours on the weekly. So everything has its own time frame. But look, like right here, what do I see on the weekly? It has a solid support right here. it had support right here before. It came down, it retested it, and it got picked up at the support again. So if this next candle were to break above and make new highs, which I don't think it'll do just because it's below a trend line, but in terms of simple price action, Bitcoin should continue to go up. So right here, remember I told you it has support?
Mhm.
Look at this candle. This candle's trying to fly. It's getting rejected at the previous neckline, but once it breaks any resistance, it does what it's trying to do right now. So right now it breached this neckline right here, and it's trying to take off. Like once it has, it's an open air, you know, it can fly up to, let's say here. This is the next resistance. So assuming this 1 minute candle closes above, how much time is left? So assuming this next candle closes above here, it can try to make a push up. If it gets rejected and it leaves a wick, like I mentioned, then the price action will most likely continue down. So this isn't, this is a game of statistics. You just want to have the best odds in your favor. It's like counting cards. Why do the fools counting cards make so much money? Because they have way higher probability of winning than anyone else. So look, just like I said, it closed above, price action is continuing up. I can't predict the future, but I know statistically, Bitcoin is more likely to go up than down if we close above, which is exactly what just happened. But do you see how the concept kind of works?
Yeah, I see it on my end.
It takes practice. It takes a lot of time of you.
Yeah, I think all of us, well, at least on my end, I don't know how far everybody's in here, but on me personally, we have to be seeing more of this. You know?
Yeah. So there's an app, you could get it on your iPhone, called MetaTrader 4. You could get a free demo account. That's how I started practicing. So this right here, MetaTrader, they have it on iPhone. It's free. So it will show you the charts, and you could practice. They give you fake money. So let's say you start off with like $100,000 account or 1,000 or whatever, it don't matter. So you start practicing with that fake money, and you learn, you know, how to answer, when to exit, stop loss, take profit. You practice with fake money, because if you start, you know, practicing with real money, that shit is gonna hurt, bro. Trust. I wouldn't recommend starting until you know what you're doing, then throw real money in. Because if you don't know what you're doing and you throw real money in, you're gonna get clapped.
Right.
So MetaTrader 4, use it like a game. You know, if you're bored, you don't have shit to do, hop on it for 5 minutes, hop on it for 10 minutes, fuck around on it, understand how the process of placing and exiting orders works. But this is how I started MetaTrader 4. I would just fuck around on that. It takes time, bro. I'm not gonna tell anybody like, oh yeah, you're gonna be a millionaire by next month. No, that's not how shit works. You put in the time, you put in the effort, you learn what you gotta learn, and little by little you grow your account. I don't know, bro. I've seen this shit like at first my uncle told me about stock trading, and I was like, nah, I'm not into that shit, cause I thought it was a scam, bro. But when you see like how much money you can make if you follow, you know, you have to have a trading plan and you have to stick to it.
Right.
But you can consistently grow your account. Neil, do you have anything you'd want to learn about or ask?
Wait, so when do you know when to like?
When to sell or buy?
Yeah, when to sell. That's
okay. So before you enter a trade, you should have a plan. Meaning you have to know, okay, I'd consider buying at this price, I'd consider selling at this price. You have to have a predetermined reward and a predetermined risk.
Okay, that makes sense.
So let's say here, this was a solid entry anywhere along here. Whoever picked up Bitcoin at 8,100 is happy as fuck, because within a couple days, that shit was back above. I was almost at 10K. Meaning, if you see price getting picked up like it did here several times, so you could have entered on this 4 hour, on this 4 hour, on this 4 hour. Like it was multiple opportunities you could have entered this trade. So don't get fear of missing out, because you could have chased it and bought up here or bought up here, and look at how many more chances you got again to buy at low prices. So let's say it came down, it came up, and I said, oh, fuck, I missed it. You set your order down here, and you just wait. If your order gets filled, good shit. If it doesn't get filled, then you missed out on this play. Never go chasing shit, because what if I come up here, I buy it up here, and then it comes down, I get scared, I sell out, I just got fucked. That's how they get a lot of people. You have to say, okay, I'm willing to pay this much for Bitcoin. I'm willing to sell it at this price. You set your targets, and it's a done deal. If the trade executes in your way, great. If it doesn't, it's a loss. But you never chase stocks, or you have to have a trading plan, trust me. But do you get why I'm saying that?
Yeah, that makes sense. That makes a lot of sense.
You have to have stop losses as well to minimize risk. But that I'll teach later on. Erica, you in here?
Sure am.
All right, you got more experience than everyone in here. So what do you think I should teach them? What do you struggle with, or what do you still want to work on?
I feel like indicators, like which one, I know like you're not a fan of them, but like certain ones that you think are better for beginners.
Okay, so first you have to understand, like I mentioned, the direction of the candles. And once you know that, the indicators are like a backup. You don't want to base your trading off of them, but you can use them as help. So like right here, for example, imagine I didn't know about support and resistance, let's say. So you see how this 20-day moving average held up Bitcoin essentially? Like it fell below it, but it got picked back up above the 20-day. So I'm not going to tell you every time that a stock bounces off the 20-day, buy it. Some traders will tell you, oh, if it goes above RSI or MACD, then you buy. If it goes below, you sell. That doesn't work 100% of the time. I don't recommend trading off of that. So like right here, I could have easily said, oh, short Bitcoin because it fell below the 20-day. But it clearly got picked up, shortly after. So they do help as a visual guide, but I would base it off of support and resistance. Or well, you said you like MACD and RSI, right?
Yeah, I like the RSI MACD so far, but then I use support and resistance too, and then I have like the SMA, I think.
The SMA?
Yeah, I think
the simplified moving average. So I prefer modified moving average over simple moving average, but that's just me, Look, I'm not gonna say the way I do shit is right, the way you do shit is wrong. Every single trader has a different style. If you find a style that consistently makes you money, I'm not mad, Like you could do the total opposite of what I'm saying. If you find a system that consistently makes you money, that's all that matters. It doesn't matter what your style is. People will learn in different ways, but if it works for you, hey. So let's look at RSI. And you said what else? MACD? Okay, so all these indicators are basically just mathematical equations that show information. So like right here at this point, the RSI was saying that Bitcoin was overbought. Same thing as here, Bitcoin was overbought. As soon as the RSI says Bitcoin's overbought, you saw a little retracement. Same thing here, Bitcoin was overbought, you saw a little retracement. Bitcoin got overbought, mini retracement. But like I said, it's not, I don't know. I'm not a fan of it, but just to see how it works. So RSI above 70, it's overbought. RSI below 30, it's oversold. So right here, it got near the 30. People picked it up. Then the MACD is just, this is volume candles. Green is green volume. Red is obviously bearish volume. And then the lines are the moving averages. But even if you didn't have this, you can see Bitcoin is failing to break above this area. So how would you take that trade? Let's say you enter off this candle right here, right? This is what I mean by risk reward. If you control your risk to your reward, you will never lose. So let's say I enter this trade. Let me get rid of these. let's say I enter this trade here, right? Off of this candle. Well, I don't like how this looks. Off of this candle right here. So this is a 4-hour candle. You would enter on a smaller time frame, but just for this purpose, it's fine. So I would enter this candle, let's say at this price, and you set your stop loss above the highs. Meaning if this trade goes against you and it makes new highs, Bitcoin is most likely to keep rallying up, and you would automatically get stopped out for a small loss. Now let's set a take profit. How would I set a take profit? You look for previous areas of support. So this little cluster right here is an area of support. Right here. You could extend it over, and if you extend it all the way, you can see that it actually got rejected off of the support on the way up. So you could have exited here. Let's say you exit here, you would have missed a big portion of the move, right? So you could leave it running, but even if you didn't leave it running, look at this trade. You just entered a trade. Your risk reward ratio is 7.24, meaning this qualifies. Let me bring this up again. So remember I said minimum, I take 3 to 5.
Mm-hmm.
So this trade paid you out 7 times what you risked. It's a good trade. You could have even been more conservative and exited up here at this previous resistance. You still get 4.84 reward in terms of what you risk. You have to have a tight stop loss. So this is let's say 5. The reason why I say risk reward is so important, let's say you lose 4 trades in a row, right?
Mm-hmm.
If your risk reward is 1 to 5, you only have to be successful in 1 out of your 5 trades and you would break even. Because you always had that proper risk to reward ratio. So you got to be, pretty bad at trading to hit 1 out of 5, and you'd still be break even if you follow your rules. So it's kind of like, imagine if you hit 3 out of 5, 4 out of 5, you're making decent returns. But like I said, it's not hard at all to hit 1 out of 5 plays. It's very realistic, and you'd still be break even. I'm not telling you, you should aim to hit 1 out of 5 plays. Like the goal is to hit 5 out of 5. But if you manage your risk to reward, you could take a couple L's and your account's still gonna be chilling. Erica, did that kind of?
Yeah.
Or do you want to go more in depth on indicators? I don't know. I don't trade off indicators, so I can't really tell you too much about them.
Another thing I'm struggling with is like doing your due diligence and finding like news sources and stuff.
So this is what I personally do. I look at pre-market. So let's say, I don't know, let's look at AMD. Pre-market is 30 minutes before market opens.
Right.
So let's say here, I look at this, right? So let's just look at this. This black area is market hours. This little gray section is after hours. So pre-market, you're already looking at whatever tickers you want to trade. So let's say this is the 21st. What day was that? Wednesday, Thursday? I don't freaking know. So let's say this day it's 6 a.m. I'm doing my pre-market checklist. Before the market even opens, I already know, okay, I'm considering taking AMD trade from here to here. I already have a predetermined stop loss, predetermined target. If it plays out in my direction, great. I can execute off of it. If it doesn't go my way, then the play's dead. You don't, if it's not in your plan, don't chase it. So here, how would I have played this? This is a big gap. Gaps aren't normal. Usually, when there's a gap, the gap will be filled. So sure enough, we open. The minute we open, we have a sell-off. How would you have executed this trade? You could have had a stop loss below. So let's say I would have bet, okay, I'm gonna enter a trade assuming that AMD is gonna do a gap fill to yesterday's lows. So here, you enter the trade just like I showed you guys on Bitcoin. you short it at these levels, you would enter at open, and my target would be here, right? This would be my target. Why my target is here? Because this is the lowest we went yesterday. I'm not gonna make a ridiculous target. Like, sure, I could have said, oh well, my target's all the way down here, and it could have almost played out, you know. But that's too extreme. It's not. It will work sometimes, not always. So I'll go to the prior day low, which is here. Now let's look at this trade setup. You put the highs. Let's say I put them at this high from yesterday. Risk reward 3.53, not too amazing, but it meets the criteria, you know? So if this trade would have went against my direction and AMD doesn't fill this gap and it makes new highs, I would have lost a very small amount of my portfolio. If it went in your direction, cool. You just made 3.5 on your trade. So if you always manage risk, you're in a good position. Now, let's say you don't have a plan. You enter, you wouldn't know when to exit, when to sell out. Let me see what it looks like on the. Okay, this is a 15-minute. This is a 5-minute. So you could have left the runner. I'm not a fan of runners. It works sometimes, but for the most part, if you make 3.5, be happy. That's another key thing. You can never be greedy. If you made 10 times what you put in, or if you doubled up, you tripled up, doesn't matter. Even if you made $50 on a trade that was losing, be happy. Take your $50, go out to eat, do whatever the fuck you want. Because many times when I start, I'd be up $1,000 and I'd be like, oh, well, fuck that. I want 5K. And that shit don't work that way. Like, if the market gives you something, be grateful, take that shit. You get greedy, you're going to get clapped. So, like right here on this trade setup, you would have made 3.5. Fuck it. Someone pick, I'm going to see if I can do a live example on TD Ameritrade. Or do you guys want to wrap it up and I run it back next week?
I'm still free.
All right, I'll do a quick example on Thinkorswim. Someone pick a stock. I don't really care what stock.
Facebook.
Facebook?
Facebook.
All right, bet I'll do Facebook. Pick a date, a random date.
December
what?
3rd.
This year? I mean last year?
Yeah.
All right, December 3rd, 19. Let me log into my account real quick.
Good.
By the way, what I'm about to show you guys, it's a platform called Thinkorswim. It's free if you want to download it. You could, I'm not sure if you have to have a funded account to do on demand. I think you don't need to be funded, but I'm not positive, so don't quote me. But yeah, this is called on demand. So right now I just went on demand, meaning you could look up like right here. So I'm gonna look up Facebook. You guys wanted me to trade Facebook. This shit. So this is a Facebook chart. I'm gonna go to, what date did we say? December 3rd. So December 3rd is a Tuesday. I'm gonna set the time to 6 a.m., which is pre-market. Hold up. Fuck it, 625 is fine. Okay, so here we are pre-market. I'm gonna make it one chart just so it looks a little better. So let's look at the weekly. Like I said, you start off with the big time frames, then you go down to the smaller time frames. So this is pre-market before market opens. This is what I'd usually be doing. So here you have a support. Here at the highs, you have a rejection. Now let's go down to the daily. So same thing. You have a mini support at these highs here. Then you have a resistance here. And this high is also a support. So this rejection is now a support. So in terms of price action, what do I see? Facebook is bullish. Made a high, got rejected, formed a support right here. Made a high, got rejected, formed another support. So Facebook should try to come up here, but it has a hollow wick, meaning it's gotten rejected at these levels. This is a daily. So now you break it down to a 4-hour. So the smaller the time frame, the weaker the signal. Okay, market. Why is this? Market shouldn't be open. It says it's 6:26. Okay, I don't know what's up with that. But so okay, it broke below the support. What should happen, theoretically speaking, it should come up to this support and get rejected. If it doesn't get rejected at this support, then I assume price action should continue it. So 1 hour, just to confirm, you start at the big time frames, you go down time frame by time frame. Rejection, rejection, rejection. It's weakening right now. So market is gonna open in 3 minutes if this were, a real scenario. So I'm waiting for my setup. Like I said, I want Facebook to fall. If it triggers above this level, then I could chase it to like a gap fill to this. So this gap could maybe get filled. If it doesn't, I'm gonna fade it off of the 198. So I'm gonna let it play out, go to 5 minutes. I'm gonna fast forward this. So there is about 2 minutes before market open. Market opens at 6:30. You look at the option chain, you already know what you want to play. Like I said, if it crosses 198, I'll chase it up. If it stays at 198, I'll get short-term exposure to here. So it has support at, wait, the fuck is this? 193. Market is gonna open in 30 seconds. You should have your orders ready. Whatever you want to trade, I like to preset my orders just to be ready. So let's say I do a weekly. The right side is puts, the left side is calls. Most likely I'm gonna try to get a put unless it holds this right here. Actually, I hadn't seen this. So it just opened. If it holds the support, I might do a quick scalp to like 198 for 50 bucks or some shit. Oh shit, I'm switching the. Okay, so here we are, market. Why does it not? Oh, it's paused. It's still not moving. Hold on. Why is this shit not loading? Alright, for sure. I think. Nope, it's still not going. I don't know what's up with this shit. Oh, there we go. Alright, for sure. So like I said, there it is, support right here. If it breaches 198, we could go to tag maybe 200. I'll play it safe with like a 199. So let's see. Does it fade at 198 or does it trigger? So you would look at the option chain. Let's say I want to get a 197 call because they don't have 198. The 200s are a lot cheaper. I'd rather play the 200s. So you would go, this interface is a little complicated. Robinhood's a little easier to understand, but you know, if you're gonna get started, why not start on TD Ameritrade? It'll be harder at first, but in the long run, it'll help you out. So there it is. This is a bearish engulfing candle. Assuming that it closes here, it should continue down. That's a 1 minute, by the way. Those are very weak signals. Let me fast forward. So usually the first 15 minutes of market open tell you the direction. We're 1 minute into market open right now. I'm gonna fast forward. So you see how it still hasn't breached? It got rejected. It's gonna try to break above that 198. So far, no luck. I'm gonna fast forward a little bit. Okay, so 10 minutes later, I fast forward, so I missed it because I pressed skip. But if you would have waited, like in a real life scenario, like I said, a breach of 198, we chase it up. If it gets rejected at 198, we fade it. So what happened? It got rejected on the next 1 minute. It's clear on the 1 minute. So here, got rejected, got rejected, got rejected, got rejected. But do you guys see how every single one of these candles has a wick?
Yeah.
So that's why I'm emphasizing wicks and candles. So it got rejected, got rejected. No one is willing to pay that price. So if you notice, it's weakening. Like it's making lower lows, lower lows, lower lows, lower lows. And then officially right here, let me see, 1, 2, 3, 4, 5. So this is the close of the 5 minute. At the close of this 5 minute, I would have entered on the next 5 minute candle with the downside trade. This candle got rejected. This next 5 minute opened below it, meaning we should fill this wick and continue down. It could have gotten picked up off of this support right here, either this one or this one, but like you can tell, it breached. So now we're at a different battle zone. Does this extend down or stay or go up? So let's say you would have entered off of this 5 minute candle, which is what I would have done. Let's look at the option chain. So these are options, by the way. I'm trading options. 197 put is in the money. So let's say you play the 195. The 195 would cost you $150. If this goes in the money, it would be worth around this price, 275. Meaning in a matter of 10, 15 minutes, you can make more than $100 per contract. If you get good at growing your account, like if you know what you're doing, you can start off with $100, double it to 200, do the right thing again, double it to 400, do the right thing again, double it to 800. But if you don't have those fundamentals, you're never going to grow your account. Because today you make 100 and then tomorrow you lose 50% and then you make 25 and then you have to be consistently growing. But never focus on how much money you're making. Just worry on whether you're winning or losing based on your plan. So I'm gonna let this run down. It should stay below this level. If it breaks above, then you could play it to the upside, but it should not break above the neckline. I'm gonna skip it. So there it is again. Like I said, it should not break above. If it would have broke above, then sure, you chase it to the upside, but it's in a bearish trend. So right here, I said, no, if it doesn't break above 198, you could fade it. What happened in the next 5 minutes? Came down. The 5 minute after that, tried to retest this prior neckline. It failed and then came down. This next candle tried to retest the neckline. It failed, came down. Same thing on the 5 minutes. Coming back up to retest the neckline. And let's fast forward. Let's see what happens. So there it is, failing again. So you see how it crossed it, but it got rejected?
Yeah.
So far, no one is willing to pay above this price for Facebook. Let's fast forward again. No one is still willing to pay that for Facebook. You fast forward. Okay, so right here, off of this 5 minute candle, someone finally, it caught a bid. Now it's running up. So at the breach of this level, which was 196.5, you could have taken a trade to 197.5, which is about a $1 move. to fade it off of this neckline. So you would have made about $2.50 on the way down and then $1 on the way up, which would translate to a $350 day in profits, assuming you had proper entries and exits. So right here, it left a hollow candle. Not a fan of that. But if we hold this level, it should continue up. If it loses this level here, then we'll get new lows. So let's fast forward. It's still holding. There it is. It broke below. It's getting rejected. If this doesn't get picked up at these levels, it's going to come down and fill these lows. If it gets picked up at these levels, it comes up to test the neckline again. So it's literally, the market always does the same shit every single time. That's why it gets predictable and you have better statistics at winning. So like I said, it's still not breaking above that neckline. You fast forward. You see how it's been trading this range all day?
Yeah.
Sure, it fell down there, it came back up, but for the most part, it's been within the zone all day. Meaning, you catch that first pop, you exit your trade, you're done for the day. I don't trade ranges, it's not worth it. This was a big move. If you're trying to trade this, like what, it goes up 50 cents, down 50 cents, up 50 cents, it's too much money that you're putting up at risk to make a small amount of money. So that's where the risk reward comes in. I don't trade ranges. If we break the range like we did here, we set a new range, then you trade it. If there's a preset range, ranges only get tighter until you get a breaker range. So like here, we ranged, it got tight, we finally broke the range. So on this 5-minute candle or on this 5-minute candle, you could enter with a tight stop below here. Why a tight stop? Because if price reverses below these levels, then there's a high probability that will go up. There it is. So let's say you would have entered a short, it got picked up, it should continue to go up. But do you see how like it's all probability? Like it's done it before, it's gonna do it again. So you took that first trade of the day, you're pretty much won. You have RTY1, you have RTY2. For the rest of the day, we should stay between this point and this point.
Oh.
So there it is. So you see how we broke here, this range? Made a little pop, but it's still within that RTY2 and RTY1. Essentially, the first 15 minutes and the last 15 minutes are the best to trade. I'm gonna fast forward to market close just to show you that 12:45. So there it is. This is right before market closed. Remember RTY1? So we triggered above RTY1 and we had that run up. So tomorrow, what do I expect? I expect Facebook to be bullish. You could have entered the trade above here. When it crossed this, you could have entered for this little run. Or if you missed it, you would wait. Remember I told you guys set your orders. If you get in the order, if you get filled, cool. If you don't get filled, that's cool too. So let's say right here you missed it. You don't chase it. If you buy anywhere up here, you know, you just got finessed. You set your order here, you wait. You missed it on the way up, it came back down. Guess what? You just got lucky and got filled here. If you would have chased it here, you just overpaid, even though it was going to come back down. And then let's say you buy here, you got scared because it was going down, you sold here. Trust me, just set your order. If you get filled, cool. If you don't, you missed out. If you would have got filled here, look at that run up you would have caught. You have to be very patient. If you're not patient, you know, you won't get rewarded. So I broke out above RTY1. It'll most likely want to come up to test this neckline and eventually come up to test the 200 area. Market's going to close in 10 minutes. There it is. Came up, tested that neckline. Once it breaches and, you know, goes past this, Maybe not today because there's 5 minutes left, but the following trading day, we could possibly see 200. So let's fast forward. This is after hours. Erica, Neil, Esco, any questions?
Yeah,
This is
question.
just a
So like,
simple intro. Like, I don't expect you guys to understand everything, but are you kind of understanding what I've been teaching so far?
Yes. The
Yeah.
support line is good for me. I don't know about everyone else, but it is kind of like confusing.
Because it's a lot to take in.
Yeah.
But you know, you have to start with something, and then it's like math, you know. When you're in elementary, they teach you addition, they teach you small numbers, and they start teaching you fucking algebra, geometry, all this other bullshit, and it's all useful if you know how to use it. You know, like, I don't know, it's a step at a time. But in terms
okay,
of
so if you're gonna
foundation,
swing trade that, where would you buy?
what happened?
Like if you were to swing trade Facebook on that day, the 3rd, where would be the best time to buy to hold overnight?
This stay here or to hold overnight?
To hold overnight.
So
You're trading on the 3rd and wanted to hold overnight.
if, let's say, so you're saying you weren't in a position on this day, you wanted to enter this day to sell the next day?
Yeah.
Okay, so let me clear this chart. If you're a swing trader, you have to be on it because you're at a disadvantage.
Right.
So let's look at it on I don't know if I want to do a 4 hour. I'll do a 1 hour. Actually, I'll do a daily for the fuck of it.
I like a daily or 4.
Yeah. So this is the lowest candle right here. So pretend this wick isn't here, right? This already happened. So just imagine this candle is not here. We're up here, right?
Mm-hmm.
So you're setting your range. What do I mean by setting my range? I come to this candle. This is the low of that candle. This is the high of that candle. So the ranges don't always have to be based on you know, the day before. Let's go to a weekly. They could be based off the week before or 2 weeks before. So let's say you set it down here. This is way too low for my taste, but let's say you even set it here, right? So you have a support at last week's lows, meaning 198.15 would be a solid entry. If you can get filled below that, obviously that's better, but even 198.15 in my opinion isn't that bad of an entry. So now I'm back to the daily. Zoom into this area so you understand where I got this line from. It's just the high of the day before. This line is the low of the day before. And then this is the support right here. Why is it a support? Because it used to act as a resistance before. Resistance, resistance. Now it's acting as a support here. Do you see that?
Mm-hmm.
So same thing here. It came up, broke above, fell below. This is the support now based off of this previous candle. So this is the new support. This is the old support. It was resistance, became support. Then this resistance became support. Do you see how that works? Now up here, you have a resistance. If we fly up here, yo, can y'all hear me? My fucking AirPods died.
There you go.
So, okay, so if we make a new support up here, this is the new support. So you're asking me where would I have entered this trade? So imagine, like I said, this candle is not here. You merely have high, low, and previous support. So you see how you could have figured out these 3 levels without knowing what this daily candle was going to do? Or no?
That you go based on right where the middle is at, right? Which is on the 8th. You can look. Am I wrong?
On the 8th.
Can you see it through there, like around that area there? You can kind of see what's gonna happen.
Yeah, but do you see why I picked those specific levels? So the target for the following day is based off the day before. So imagine this is today. You have
Okay.
the highs, you have the lows. So these two targets are picked off of literally the candle from the day before. And then this other line is the previous support. So why is this the previous support? It picks up this candle, and off of this candle, you get the new rally. But then if you look left, this used to be a resistance. So you see a resistance, it fell through. When we break through this resistance,
So once it goes through the resistance, it becomes a support.
yeah, so you see right here, we break through resistance and you get that big move. Boom, like it just flies.
Oh shit. Okay.
It's like, imagine like Superman flying through the ceiling. You know, this fool's coming up like flying, boom. And then he comes back down, finds a support off of this old resistance. So it's
Oh.
like he flew out of the house,
Correct.
he landed on
Right.
the ceiling. Now he's landing on the ceiling, he's ready to fly again. Hit another ceiling.
Now, as long as your trades, as long as everything looks as the support, not dropping below the support, is
Yep.
that something that I'm interested in
So in this
as a trader?
example, it fell below support, which is your bonus.
I see that.
If you
Yes.
would have bought it below support, you literally got the best deal you could have gotten. So you could have set your order at the bottom of this support and you would have still gotten a decent fill, but you know, this is what, maybe 5 cents lower than that? It's not a big deal. You could have bought anywhere here. Oh, fuck, I don't like that line. Hold on. You could have bought anywhere here and still made money. You see this whole wick?
Mhm.
This whole wick got rejected. You could have bought anywhere here and you would have made decent returns. Sure, you want to make the most you can make, which is why I'm saying you make your targets and your stop orders and your losses, everything since before market opens. So you would have set, let's say, an entry here, assuming it reverses, right? So let's go down to a 15 minute. So this is your high of the day before, the low of the day before, and this line back below is your previous support. So like I said, if it bounces here, we'll see 200. It did not bounce. It immediately lost the support. So it lost the support, but you assume that this support is going to hold. You simply assume because it's done it before. It's no science to it. It's just statistics. You know, it's most likely going to bounce. So you could have bought anywhere on this wick. You see how big this wick is? Let me go down to a 5 minute. So you see how it immediately fell down there, and within the next 5 minutes, they bought that shit up so fast?
So you're saying it's good to buy in when it's below the support?
No.
No.
Yes and no. If you are able to buy it below support, it's good, but at the same time, it's good because you got this green candle. If you would have bought it on, because with the same, okay, so you're saying it's good to buy it below support, yes and no, because what if this green candle didn't happen? What if it fell below support and continued falling? So supports are supposed to hold, which it did. Remember I told you guys that the smaller the time frame, the weaker the signal? So if you would have entered this trade to short based off of a 5 minute candle, you would have got clapped. If you look at it on the 15 minute, you see how the 15
okay. So you
minute
guys see a bigger projection.
Yeah.
Yeah.
You see
Okay.
how the 15 never went down there, but the 5 minute was way down there.
Right. So you got to see a bigger projection of it.
Yeah, because the smaller time frames, they'll fake you out a little more. So anywhere here, literally, bro, you could have bought anywhere here. So you had a couple opportunities to buy below this level, right? So right here, a small wick, you could have bought here somewhere, you could have bought here somewhere, you could have bought here somewhere, here somewhere, here somewhere, here somewhere. So you see what I mean? Never chase it. This opportunity came back once, twice, 3 times, 4 times, 5 times. You know what I mean? Like you could have bought up here, you could have bought up here, you could have bought up here, you could have bought anywhere. But why? Just set your order down here and just wait. You know, like let's say right now at 7, what time is this? At 7:30, I didn't get filled. I didn't get my order filled to 8:15. You know, I waited almost an hour for that trade. That's fine with me. You know, I'm patient. If you're not patient, you're like, oh shit, I'm gonna miss it. I'm gonna miss it. Guess what? You just paid extra for this shit because you didn't want to wait 1 hour to buy it for less. So, Erica, like I said, you would set your prior day levels, which is where I'm getting this from. So anywhere below here would have been a good entry.
Okay.
And you manage your trade accordingly. You would have a long position, meaning you want it to go up. Where is your stop loss? Your stop loss is below this prior support. This candle right here is what I call stop loss hunting, meaning anyone who entered this order and had a stop loss below here, the market maker just finessed all of them. This is not supposed to happen. When I see weird long ass candles like this, it's stop loss hunting. So you could have entered anywhere here. You set your stop loss below this support. Risk reward would have suited the 3 to 5 ratio. You enter along here into the next day. You hold it. You swing it. And assuming we hold these levels, we should continue bullish the next day. So let's look at what happened on the 4th. So there it is. We hit 200. We hit 200. And remember I said 200 was a, let me go to a daily. I said 200 had a resistance somewhere. Yeah, here it is. Oh, no, I'm tripping. I'm looking at the wrong one. So you've matched this up right here with this candle. You see how they match up just about perfectly?
Yeah.
Got rejected once, got rejected twice. Chances are it might get rejected again. Doesn't have to, but you just have to look for, you know, those prior failure zones or the prior support zones. So R, and it might act as R again. It doesn't have to, but as you can see here, it did. So you would have set this R based off of prior levels. You come into the day and look at what happened. Price went up and immediately came down all the way down here, and then it got picked up, which is how you end up with candles that look like this. Meaning, let's say you could have sold out your 200 call here in profits in the money, right? But you got scared and you sold it down here. I'm not gonna tell you, like, that's not bad in my book, because if you were in the money, basically don't wait. At open, if you're up $1,000, if you're up 50%, up 100%, if you don't want to trim your whole position, at least trim a decent amount and then leave a runner just in case it goes against you like this. So it came down, it came back up, got rejected off of support, off of resistance one more time. So let's say you didn't exit here, you could have held, and I would have exited here. This is way too many wicks. 1, 2, 3, 4. It's literally saying, like, we're not paying you above this price. You could have faded it here off of the 200 level back to this support. That's a $2 move. From 200 to 198 is a $2 move, or $200. This is 9:15. So within about 2 hours of market open, you could have made $200 with maybe like 150, or, well, I don't know what the contracts are going for, but do you see how I do the swings, Erica?
Kind of.
It's support and resistance.
So you set your orders before you start, and then they happen automatically when they hit a certain mark?
No, because, okay, remember I told you could chart on TradingView?
Yeah.
So when you're trading options, I don't like presetting orders because there are too many factors to calculate for it. It's hard to calculate for delta. It's hard to calculate for the IV. Like, okay, so for example, let me give you an example. An $8 contract, I think I mentioned this play to you. The $8 contract on Tesla hit 1,500. So imagine you would have said, oh, well, fuck it, I bought it for 8. I'm gonna set my take profit at 500 bucks. Like, there's nothing wrong with that. You know, you still made a profitable trade, but you don't know what the real value of that contract is until, you know, it goes in the money. So in terms of setting orders for your contracts, it's a little hard because you don't know what they're going to be worth. What I much rather do is what I mentioned on TradingView. Remember I told you about setting alerts?
Yeah. But you can only do one for a free account, right?
Yeah, I think it's 15 for the upgrade.
I
I'm not sure.
set one, and then I just set the rest on Thinkorswim.
Look, like I said, it's okay for you to trade only one stock at a time. Learn AMD, learn Tesla, learn whatever stock you like. Trade the same stock every day, and you'll improve much more than if you're trying to trade 10 different stocks at once. So let's say here on AMD, you say, oh, you know what? Like, I'll chase it. If it breaks above this level, and then you set an alert. Okay, buy AMD if it breaks above, and then you could add a little note, R at 55.6, like watch out, you know? So you set yourself little notes. Let me go to daily. You
How's
set
that
yourself,
PDT? If
what
you're
happened?
trading one and you get out and you need to hold it for like, you know what I'm saying? Like you can't do more than 3 trades in a week.
For day trading?
Yeah, if you like, I don't have the 25K, they're gonna flag me if I do too much.
So what I started doing when I couldn't day trade is you could open up more than one account. You could open up an E-Trade, Robinhood, TD Ameritrade, whatever. Let's say you put $100 in each account, you could day trade $100 3 times on each account each day. So let's say you do 1 or 2 day trades on Monday on one account. On Tuesday you do another account. By the way, I don't encourage day trading. If the opportunity is there, then sure. But more often than not, if you're day trading a small range, you're gonna more likely lose money than make money.
Right.
But like, yeah, that's an option. You could get different accounts, so you could get more day trades and, you know, do that. Because I do understand what you're saying with swings, especially in this market environment. Like, imagine you would have swung this, right? So it got rejected. The price action lately has been fucking retarded, honestly, to be honest. It does not make sense. But regardless, you can make good swings. But day trading, the only workaround I know is either you have 25K in your account or you set up multiple brokerages so you don't get pattern day traded.
True. Yeah, I already have Robinhood, I just don't use it for options.
Yeah, I mean, Robinhood's not bad. You don't pay commissions, you know, so
but they're
okay.
Yeah, I'm just trying to learn how to swing trade without losing
money.
Yes.
Look, here's the thing about swing trading.
All day, but
so let me ask you a question. What are you swing trading? Weeklies?
Weeklies?
Or no?
No.
Because the delta on a weekly is gonna go down way too fast.
No, I don't do weeklies at all.
Like if you're swinging weekly, if you hit, it's good. But if you miss, you can literally lose 50% of the trade in overnight.
Yeah, I only did weeklies that one day, but then I made like 3 day trades and got flagged on accident. So.
Nah, yeah, just don't get your account locked and you should be straight. But like from here, I did a swing trade from here to like here. That shit was ridiculous. I personally prefer long dated contracts. I think options is too advanced. That's like a different topic I'll probably get into later. But in terms of market fluidity, all that really matters is support resistance. So this resistance has been here for a long time. It's used to be short-term support, but it used to be resistance, The minute we lost that level, we immediately gapped down. And right here, same thing. Resistance. We've reached above. The minute we lost that support, immediately flew down. How did we close on Friday? It came up to test and it failed. So what do I assume? We're gonna come back down to the 52 level. If it reaches the 52, then we can maybe do a gap fill right here. So it's literally one level at a time. If this triggers, then we can maybe see this. If we see this, and maybe we can see this. But I don't bet we're going to 45 from 55 just because they got rejected. So this got rejected. If this happens, then maybe this happens. If this happens, then maybe this happens. But you don't just like, oh shit, AMD's going to 45. Like, you know what I mean? Just take it one level at a time. One support, one resistance. if you follow your rules, I don't know. Remember the A and B live example I showed you, Erica?
What'd you say?
Remember the
Yeah, I
A
remember
and
you
B?
like it broke resistance and it went down and you.
And then remember I was like, oh, well, this is my target. This is where I'd consider selling. And then it literally like reversed off of that line.
Yeah.
So do you think that's more helpful? Like, would you prefer to see me live trading, or what do you think would help?
Can we see that next week?
I feel like live training does help a little bit. Actually, I think it helps the most, honestly.
I could do live
I
trading.
do live training like every day at this point.
Live trade every day.
I would try to watch someone every day.
I'll consider it. Yeah, I'll fuck it. Why
And
not?
not too long, like the first hour and like the last hour. I don't like watching like trade fraternity. He trades all day. I don't sit there all day with him.
Yeah, I feel that. Yeah, maybe I'll do first hour and last hour, or I'll record me trading all day, and I'll just record like the highlights of when I actually took the trades, and I'll explain my thought process.
Yeah.
Oh yeah.
Yeah, that'll help.
He doesn't do that on training fraternity. He like shows. He tells you
trading
making a play, but you
fraternity,
can see it.
like that motherfucker be like, oh, Facebook's going crazy. I grabbed the like this fucker. Don't even.
Right. You just hear the beat, and then you're like, well.
Okay, I will tell you this: trading fraternity is rich. Like, I don't have the liberty to say, fuck it, I'm gonna throw a rack on this play that's stupid and it's gonna lose
So
money. Like, I aim to win every single one of my trades, which is not gonna happen, but you have to have that mentality. If you're like, oh, fuck it, I lost $100 today. Like, this shit is not gonna work. If you lose $100, you better be pissed and make that shit back tomorrow. Like, I'm not saying be pissed. Like, you shouldn't let this shit mess with your emotions. But my point is, you shouldn't be comfortable with losing. If you're losing money, reevaluate your strategy or make some changes, because you shouldn't be consistently losing money. This is the point of this is to make money. If you're losing money, like, you're better off not trading.
Hmm.
I think that's pretty much it. Fuck it. You guys want to recap on anything?
I'm good.
Like I said, I'm gonna try to get a system going, the live trading or something that'll help you guys out a little more. I think you guys are right. Live examples might be a little better.
That'll be great. That'll be great. And then you said you're gonna put this up on YouTube or something? Or not yet. I might have to.
Maybe not this one, just because it wasn't very we don't really have a format to follow. But I'm gonna work on something and I'm gonna see what works out. Cause I don't know how I do the live trading, but because YouTube's a little harder. What do you guys think would be better, Instagram or YouTube?
I don't mind.
I don't care either way.
Yeah.
Doesn't matter.
All right.
If you can, you're recording this, right?
I recorded this, yeah.
If you can, send me it so I could send it over to my friend.
All right, for sure, bro.
If you can, bro.
No, yeah, I got you. I'll upload it anyway. I'll send a link if you guys want to share it or whatever. But I didn't cover a lot of stuff, so this is just like a simple intro.
Right.
Oh, this is fucking Luis.
This is great.
I was tripping. I was like, who's Abby?
No, that's me. That's fucking Luis.
Nah, yeah, but I was tripping. I didn't know who that was.
Yeah, no.
For sure. Hey, what's up, bro? Did you kind of learn a little or not really?
Yeah, well, I already knew like most of this stuff because like I'm telling you, like I stopped like not that long ago. But like the whole how you were executing trades, I didn't really get that. Like I was just fucking doing shit so fast. That's what I'm trying to get better at.
Nah, yeah, you gotta slow it down.
Yeah, I just watch YouTube straight for like 2 days. That stuff comes like second nature.
What, the executing?
As far as like Thinkorswim, like how to look at option chains and then look at candlestick charts, like just basic, like one at a time, just focus on one thing. That's how I got kind of comfortable with
yeah,
charts.
definitely you gotta take it slow. But like I said, number one thing, money management, control your budget, risk reward, stay in the game. Like if you have $1,000, don't fucking throw it all in the play this week, because if you lose on that play, you got clapped. Spread it out, 100 a month, 100 a week, whatever fits your budget. Shit, $20 a week, don't matter, bro. Set a budget, stick to it, and you'll stay in the game. Trust. I'm telling you, bro. I've seen $20 turn into a rack. Never in my life
Damn.
did I think that shit was real until I started trading. It's fucking ridiculous. If you stay in the game, bro, you're straight.
So my $20 turns into a rack.
What happened? No, I'm gonna start posting live plays for sure, because I think if people start eating, those would get a little more interested.
True. TLT's up already.
I actually got rid of my TLT.
Of course it did.
I made a lot of money on it, but I do not like this drop. If China, so you see how we're below support? If China happens to sell their treasury bonds, which they have done before, pretty much just no TLT can fall to 120, which is a play I grabbed on Friday. TLT can still blow up a little higher, so if you want to have calls, that's fine. I just had already made a nice amount of money off my calls, and I said, you know what, I'm gonna trim and get some puts.
I got to put, I think.
Like, what happened?
I got to put on TLT.
They were cheap, right? Like what, 35, 40 bucks?
I think I got.
For a year out?
Yeah, I got the 120 put, and it's up $5.
Yeah, see, and we got those with the year's time. Like, when you buy time on a play, so this specific play right here, if you would have bought here around February and you sold in March, so less than a month, you would have held this for less than a month, I think this turned like 500 bucks into like 40K. And it's just because, like, I'm telling you, bro, there's a lot of opportunities. One of my big plays is on Amazon right now. So let me show you guys how the pricing works. Let me go to a monthly. So these are option contracts. The in-the-money contracts for Amazon are worth $250,000. The ones at this price are worth $6,840. At this price, $2,000. So let's say you buy the 120 right here, right? You buy these contracts today for 120 with a year amount of time. If Amazon falls to this level, you would be up 6,000 on this 120 account. So this $120 position would now be worth plus 6,000. If it falls a little more, it would be worth this. Essentially, if Amazon falls from these levels to 120, which is right here, this $120 contract would now be worth around this much.
Crazy.
So this is a wild, wild play. This is a lotto for a year out. I do not expect it to happen, but even if we get a 0.5 retracement, which is to this level right here, I get half of this money. I would be very happy with half a $250,000. Like, you know, like, it's ridiculous, bro. For 120, I paid 120. The reason why these are so cheap is because no one sees this happening. But this is way too overextended. This is literally exponential growth. It is not normal, and I'm comfortable risking $120 on this play a year out to make $250,000. So just to understand how option prices work. But there's a lot of opportunity. If you start off with 20 bucks, 50 bucks, 100, don't matter. Take care of your money and you can stretch it. Fuck it. I guess that wraps it up. Anything else before we go, or y'all straight?
I'm good for today.
I think I'm straight. I'm finna eat.
I'm good, bro. If you could send the video.
Yeah, I got you, boss. I'm gonna see how I do that right now because I've never recorded before. But as soon as I figure it out, I'll send it to you guys.
Yeah, for sure, bro. No rush.
No, I'm sure, boss. All right, for sure. I'll catch all of y'all. Have a good weekend, guys.
Thanks, man. I appreciate it. Appreciate the class. Have a good one.
That's what you too.
Yes, thank you so much.
Oh shit, my fault, Luis. I just seen your message in the.
No, you're good, bro. You're good.
All right, peace out, y'all.
All right, peace out.
Bro.